Time for the big three. Three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Jessica Inskip, Director of Product Education at Options Play. Good to see you both. Before we get to IBM, your AI pick there, Jessica, how are you feeling about the market? We've been getting in pieces of news. You have the S&P above 4,200. Your thoughts?
Yeah, I think it's so interesting, especially what your last guest was saying about the breadth of the market. Did a really good study where we looked at the S&P 500 equal weight on a ratio or relative chart versus the broader S&P 500. And normally if you see that in a decline, that's indicative of lack of broader participation or breadth, which would lead you to think that there would be a decline. But what came out of that study is if you would have missed out on a lot of longer term rallies because the S&P 500 is market cap weighted, which means bigger securities do drive the index. So it actually debunked that in some instances in larger rallies, which I think is really, really interesting. So it's okay that it's narrow based as long as it's backed by valuations.
Right. Let's get to your name here. And the first one is IBM. And you think this is a good pick, a top pick. Why is that?
And so IBM, I think, is really interesting going into that AI boom and AI mania that everyone's talking about. There are, if you go back to the .com boom or even look at the World Wide Web, it laid the framework that we needed. And then, of course, now we understand technology a little more. So studying the use of the World Wide Web, it was software that went first and then followed by these broader applications. So IBM actually has a full stack that's built based on understanding those type of integrations that are necessary for AI capabilities. So they build on top for training, deploying, and supporting AI capabilities across any type of environment. And have something coming in July 2023 called WatsonX.ai. And it has three main components, which is AI, data, and governance. So WatsonX.ai, WatsonX.data, WatsonX.governance. Those help that broader or bigger barriers that come in. I saw something earlier today where someone was talking about, well, to use these generative language models, it's very, very expensive to build out those models. WatsonX is trying to remove those barriers and has software initiatives that target that productivity and cost-cutting measures. So that way, if you do want to utilize AI and generative AI languages, it supports those AI workloads and takes down those barriers to market. And then in addition to that, they are relatively attractive from a valuation perspective. So about 13 times next year's earnings. That's not too high in comparison to the broader S&P 500, about 18 times, expecting 4% revenue growth and about 6% earnings per share growth.
Yeah, I think that valuation is an important point, right? Not a fly-high stock. Ben, let's look at IBM here. I mean, it's been on a recent move up higher, not in a big way, but higher.
Yeah, it has, and I think that's a reflection of the very interesting fundamental narrative that Jessica just broke down, but higher on the more intermediate, short-term, longer-term, right back to an area where if the bears are still in charge, you'd expect them to step up. But this is a good example, a working example of what I like to look for, Nicole. The two separate areas of price development. You've got the horizontal, you've got the vertical, and then the transition back into the former of the two. We're talking right back into this sideways consolidation area. Now, this is just a quick example that I wanted to point out, a 5-minute chart time frame where we're looking at two areas, again, where value formed, and in this instance, we're moving higher. This is just the last couple days here. Let's take a look at a longer-term chart here and look at the last couple weeks, a very similar situation. You've got migration of value to the upside. These are 30-minute candles, and you can see that, well, we went ahead and identified, what is it? Looks like 4 areas of consolidation here, 121, 50, 60 area, 123, 126, and currently balancing around 129, so we're just below that. But here's what I'm talking about, more intermediate, granular time frame trend up, but look at what's going on in the longer term time frame. So we're in a wide range consolidation where there is some room potentially to work your way towards the upper extreme of that, which I think is what Jessica's potentially looking for here, back to 130, 134, 135 is the real line in the sand, though. Anything above that invalidates the working assumption that we're trending lower at this point, where we have seen migration of value. This chart goes back to the beginning of November, December last year. You can see this weakness since the beginning of the year, but again, a little bit more sideways, consolidating, and again, inching its way towards the upper extreme of that range right now.
Understood. Okay. So what do you think there, Jessica, as you take a look at Ben's charts?
Yeah, it speaks to that the valuations aren't participating in the hype, and IBM certainly is not either. When I think of AI, I do not think of IBM, and I think a lot of investors are thinking that as well. So once they have the release of their product in July, that's when I'm going to look for testing of those levels that Ben points out. But this is a longer term play, waiting for that AI hype to either participate in or that new technology show up in valuations.
I mean, we remember Watson and sort of, you know, that was something we were talking about, and then it sort of fell under the radar. So you're bringing it back up to us front and center. So thank you for that. Let's turn our attention over to cybersecurity. You're looking at CrowdStrike. Why this one?
Yeah, so as AI is more important and we are getting smarter technology, that also comes with risks associated with it. And of course, that type of technology in the wrong hands leads to terrible things. So cybersecurity is increasingly more important, even without the AI boom, just because of our technological advances. They are reporting earnings tomorrow. I would rather reiterate their valuations on that earnings call and not buy into earnings. That is, of course, investors' choice. However, I would rather reiterate my thought process. If you buy into earnings, that turns into a gamble, which is what we're not looking to do. Now, they are a leader in what's called the endpoint protection platform. And I thought it was really interesting doing my research is one of their main competitors is actually Microsoft, but they stated on one of their recent company briefings that they actually take 80% they have a win rate competitively to Microsoft, which I thought was really, really interesting. But they have a compelling growth potential. They've got some emerging solutions, especially with those cloud models. So all going into that AI boom, it's just thinking about what is necessary to actually bring that to fruition. Cybersecurity is one of those, and CrowdStrike would be a beneficiary of that cybersecurity aspect.
Yeah, I think it's definitely viewed as a leader in the group without a doubt when it comes to cybersecurity. Ben, what are your thoughts when you take a look at this CrowdStrike chart?
I'd have to agree, a very similar fundamental narrative, right? And almost identical when you look at the charts in terms of the intermediate, the more granular time frame trend up, but the longer term right back into a key area of resistance where shares of CRWD have struggled in the past. Let's begin with that. First and foremost, 4-hour time frame. Actually, I wanted to start with a more granular now that I think of it, because you've got a similar pattern playing out here. This is the 1-hour time frame. Going back a few weeks here, the rally we've seen from 110 up to 160, and I went ahead and mapped out some of the areas of consolidation that my eye was drawn to that coincide with these overlapping, more rotational areas relative to the vertical separation areas. And ultimately, you see value moving higher, right? So you can establish a working assumption the trend is to the upside, and you're expecting that to continue. Now back to that 4-hour chart that I was talking about, because this goes all the way back to the beginning of January. And here you can see a similar pattern playing out. Areas of consolidation that have been moving higher, not just over the last few weeks. 100, 115, 126, 146, 156, and the expectation is that will continue. But again, I want to point out here now, as you take a step back and look at the bigger picture, we're just now running into this key area. Before we talk about that, let's begin with how, after a bit of a double top up here, we'll call it around 300, 298, which formed that top November, December of last year, we started to see bigger picture migration of value to the downside. 282, we get into, we're talking the end of last year, the fall of last year, around 185 before it broke down, and then beginning of this year consolidating around 123, working our way up again right to that area where there's a little room to go here before we invalidate the trend of the downside but come into this key area of resistance. It'll be interesting to see. Bears still in charge here. This will be a level where you'd expect them to step up. I understand the fundamental narrative. I think that's what we're seeing on the more intraday. It'll be curious if they can see that if they can break that trend on the longer term as well.
Yeah, and look, you know, on the longer term, I was just looking at some of the moves. I mean, you're just showing that one move right there. I mean, you showed us all of them, but the one that I was looking at just now that grabbed my attention was the move higher just recently. 1 month, 30%. That's beautiful, right? So year to date it's higher, but everywhere across, but even long term, even over 52 weeks, it is now in the positive. So Jessica, your thoughts, final thoughts here on this one.
But the fundamental narrative needs to be reiterated from what we hear on earnings calls. Those are extremely important because that gives us an insight into how management is handling the demand or any supply chain constraints, anything of that nature. And it's just so important to have key management. And we've seen that this year with technology across the entire sector. So that's what I want to look for before I would be a buyer into this. And earnings are tomorrow for this security.
Right. Okay. So we'll watch for that. Good point, too. What about Procter & Gamble? I mean, when we think about consumer staples and what people need versus what they want, your thoughts here?
Yeah, so it's so interesting looking at the overall defensive sector because it is largely overvalued in comparison. Procter & Gamble itself is trading at 22 times next year's earnings, so overvalued in comparison to the broader market. However, it does have a dividend of about 2.56%. So this is a defensive dividend play. It's not too super overvalued in comparison. That sector seems to be overvalued because portfolios are positioned more defensively in preparation for this anticipated recession that we seem to be holding on the edge of our seats, anticipating at some sort. Procter & Gamble, when you think of consumer staples, that's first that comes to mind because of the consumer products that it covers: beauty, grooming, healthcare, fabric, family, Pampers, Tide, everything that you need within the consumer staples is covered under the Procter & Gamble umbrella. So just layering that on, even though personal care prices and home care prices are rather sticky, that is pricing power for Procter & Gamble doesn't play too well for inflation. So it has a high quality valuation or fundamentals attached with a dividend, which is a good defensive play for the overall portfolio that adds to that diversification aspect.
Understood. And that dividend yield, I mean, people like that too. That's a bonus too. Ben, your thoughts here on Procter & Gamble?
Well, I'm looking at Procter, and the one thing that really I was drawn to is the breach of this 146 level. I think it's important on the bigger picture. We're seeing some energy below, which sort of supports this being a key area. Let's just begin with a more intermediate time frame. I got hourly candles queued up here. We're looking at the last few weeks, some of the selling from the 150, 160 area down to currently trading 142. You can see some energy associated with this big move out of balance here right now. The vertical phase that we're in, so we're seeing lower lows and lower highs. Again, we talk about the high conviction associated with this relative to the sideways, more horizontal phase that we're breaking out of right now. But again, we're looking at an hourly chart here, so I don't want to get too married to this, but I do want to point out weakness here just over the last few weeks after we broke down from 156, about a $10 move here. And again, in a vertical phase, you can see it's pretty well defined, right? Lower lows, lower highs by those 3 or 4 red candles there on the bottom right corner of your chart. Now, let's step away from that because I want to quickly get into a daily time frame. I want to show you how this is, well, somewhat counter trend to that longer term move that we've been in with a large area balance that's been forming. Again, right around this 146 area, what has me concerned, we always talk about the significance of the upper, the lower extreme, right? Well, here's the middle area, which is very significant as well. You've got an upper extreme 165, a lower extreme 120, 125. High conviction, we're talking the spring of 2020 to the upside, but look at this since, much more just overlapping, rotational, and really not a lot of conviction one way or the other. So 146 was a significant area. We're breaking down below that. Ultimately opens up a door for a retest of these lows that we saw 2021, 2022 around 120, 125. But again, there's a fundamental narrative that supports this, I think. It's just weird that market circumstances and fundamentals haven't really been adding up to what we've been seeing in price. I mean, I look at the NASDAQ screaming higher with 2-year yields up and through 4.5% to begin the week. I mean, something's out of whack to say the least. Procter & Gamble to the downside, 146 was a key level. For me, the fact that they gave that up, I'd want to see them above that before I started to get optimistic about this one for a retest of that high again, 165 that we saw last year.
All right, so watching that key level, especially as we broke down below that, I mean, I think that 2020 move on the left side of that screen is crazy. It just reminds us of what we went through. But to your point, watching some key levels here. And Jessica, you mentioned the valuation on this one, and one of the analysts said what a great company it is, but also was also a little concerned about the valuation. Final thoughts.
Yeah, on Procter Gamble, I think it's really interesting because we have a restrictive Fed that is tackling inflation, and since prices within what Procter and Gamble cover are rather sticky, that's actually a risk that with this security. So I'd want to see those levels that Ben pointed out to be overcome. But this isn't a growth play; it is a dividend play. So if you're looking to seek income, it does come with that dividend.
Right. You pointed that out. Thank you for that. Appreciate it. Great to see you both. Jessica Inskip of Options Play, and of course our own Ben Lichtenstein. Thank you for being here for the Big Three.